The next issue that we need to deal with in this topic of change in profit sharing ratio is accounting treatment of goodwill. So in this section, we will discuss in detail the accounting treatment of goodwill at the time of change in profit sharing ratio. In this video, we will see the introduction to the treatment of goodwill. Before we begin, let's recall Accounting Standard 26. Now, according to Accounting Standard 26, goodwill should be recognized in the books only when consideration in money or money's worth has been paid for it. So, which means goodwill should not be shown as an asset in the balance sheet unless consideration in money or money's worth has been paid for it. Therefore, in the case of change in profit sharing ratio, admission, retirement or death, goodwill is not recognized in the books of the firm because consideration in money or money's worth is not paid for it. So, as per Accounting Standard 26, in this chapter of change in profit sharing ratio, we cannot record goodwill in the books as an asset because consideration in money or money's worth has not been paid for it. Now let's understand goodwill in this context of change in profit sharing ratio. Goodwill in the context of change in profit sharing ratio. In the context of change in profit sharing ratio amongst the partners, the partner whose share of profit increases, that is a gaining partner, should compensate the partner or partners whose share of profit decreases, or the sacrificing partner. And such compensation which is payable by the gaining partner or partners to the sacrificing partner or partners is referred to as goodwill or premium for goodwill. So we said that the gaining partners have to compensate the sacrificing partners. So how much is the amount of compensation which is payable? The amount of compensation. The amount of compensation that has to be paid by the gaining partner is equal to, we need to take the value of goodwill of the firm and multiply into the gain of the gaining partner. That is the share gained by the gaining partner. And also the amount of compensation to be received by the sacrificing partner is equal to the goodwill of the firm into the sacrifice by the sacrificing partner. That is the share that is sacrificed by the sacrificing partner. So we learnt how to arrive at the amount of the compensation. Let's see this with the help of an example. Let's say A, B and C were partners in a firm sharing profits in the ratio of 2:2:1 respectively, which means the whole profit sharing ratio between A, B and C is 2:2:1. They decided to share future profits and losses equally. So the new profit sharing ratio between A, B and C is 1:1:1. We are given information that the value of goodwill of the firm of A, B and C is rupees 1,50,000. Now let's see who gains and who sacrifices first. We have already learnt how to get the gain and sacrifice. Just a tip for us to recall how to get the gain and the sacrifice. We need to calculate the old share of the partners minus the new share of the partner. And if the answer is a positive figure, it is a sacrifice by that particular partner. And if we get a negative figure, it is a gain by that particular partner. So let's do that. OPSR between A, B and C was 2:2:1 and the NPSR was 1:1:1. So for A, 2/5 old share minus 1/3 new share is equal to 1/15, a positive figure. So it's a sacrifice by A. B also is 2/5 old share minus 1/3 new share is equal to positive 1/15. B also sacrifices. As far as C is concerned, old share 1/5 minus the new share 1/3 is equal to 2 divided by 15. It's a negative figure, so C has gained. So the sacrifice of A is 1/15, the sacrifice of B is 1/15, and the gain of C is 2/15. So as per this, C has to give compensation and A and B, being the sacrificing partners, have to receive compensation. So we said the goodwill of the firm is rupees 1,50,000. Let's calculate the compensation to be paid by the gaining partner or C. The compensation to be paid by C is equal to the value of goodwill of the firm into the gain of C. So goodwill of the firm value is 1,50,000 into the gain of C is 2 divided by 15, and therefore the compensation to be paid by C is equal to rupees 20,000. How much of this 20,000 goes to each of the sacrificing partners? So what is the compensation to be received by the sacrificing partners? For A, value of goodwill of the firm into share sacrificed by A, 1,50,000 value of goodwill of the firm into sacrifice of A is 1/15. So the answer is rupees 10,000 compensation to be received by partner A. For partner B, again value of goodwill of the firm 1,50,000 into the sacrifice of B, which is 1/15, and the compensation to be received by B is also rupees 10,000. So in this introductory video, we recalled Accounting Standard 26. We understood what goodwill is in the context of change in profit sharing ratio, and also the amount of compensation that has to be paid by the gaining partner and received by the sacrificing partner with the help of an example. In the upcoming video, we will see journal entries for treatment of goodwill in change in profit sharing ratio.